This video is going to be different to the regular video on this channel. There's no flashing hello with some random sound in the background. I want to talk about the macro cycle, and I want to talk about a message that most people do not want to hear. Now, I'm not making a video like this to get a lot of clicks, to get a lot of attention. I'm doing rather the opposite. I make this video for people that have an open ear for this message, because YouTube actually rewards the exact opposite. I've published a lot of meme coin videos in the past few weeks, and the views pretty much went 3 to 4x. But in this video, we're not going to talk about fart coin or tits coin or anything like this. We're going to be more technical. We're going to talk about the things that actually matter long term. What we've got over here is the 1-year correlation coefficient between the Nasdaq 100 and Bitcoin. And this chart starts in 2014 when Bitcoin was just a few dollars, goes all the way to today. The correlation coefficient always moves between +1 and -1. And when the correlation coefficient is close to +1, it means that the two assets tend to move in the same direction at the same time on a 1-year time frame in this case, and they tend to move in opposite directions whenever the correlation coefficient is -1. When it's at 0, then there's no real connection between the two assets in terms of price movements. And we have seen how the correlation coefficient was just randomly fluctuating in the early existence of Bitcoin, right? There was no real connection between traditional finance and the Bitcoin price, but that has now changed. Since the year 2019, maybe 2020, we have seen mainly positive correlation coefficients, and now we are very close to 0.7. We hover around 0.9, 0.7. So on a 1-year time frame, the two assets tend to move in the same direction at the same time. Now, why does this matter? It matters because when you've got a portfolio that's somewhat significant, it's not just a few dollars, it's in the thousands of dollars, tens of thousands, hundreds of thousands of dollars. If your portfolio is many years of your annual income, then you need to be diversified. You cannot just own Bitcoin and altcoins and now even technology stocks, because those things will go down at the same time. And what this also means is that now technology stocks and Bitcoin tend to compete for the same part within your portfolio, right? You might have property, you might have precious metals, you might have Bitcoin, you might have technology stocks. In the past, technology stocks and Bitcoin didn't move that much in sync. Now they tend to move in sync. And so it's the same kind of decision that you have whether or not to buy house A or house B, or stock A or stock B. You're not going to buy all the houses. You have to decide where you put most of your money in. You have to make a decision what's the better of the two kinds of investments, because there's all that correlation. And so those are competing assets now. And so that's why I think this chart here is an eye-opener. This shows Bitcoin's price performance relative to the Nasdaq 100. So how much did Bitcoin outperform technology stocks? In the early days, we've seen a lot of that outperformance, but now the outperformance is not that clear anymore. Isn't this fascinating over here? This is the end of 2017 up until now, the end of 2024. And over the span of 7 years, Bitcoin only outperformed technology stocks by roughly 50%. And during all of that time, during those 7 years, Bitcoin only outperformed the Nasdaq 100 by 50%, by 50%. All of that volatility for that meager of a return, aggregated over 7 years, 50% more. Over here, Bitcoin was at 20,000. Now it is at 100,000. And so this seems very nice. This is a 5x return, but relative to technology stocks, it wasn't that great. And we got this 50% outperformance, while temporarily we have seen crashes of 80% over here or 70% over here. And so currently we are at the exact same relative valuation level to March of 2021. So Bitcoin went from 60 something K to 100K, but the Nasdaq 100 also appreciated to that same degree. We are close to that top in terms of relative valuation. So again, this is the middle of March 2021, and this is the Nasdaq 100. It went up by 65%. And here's the middle of March for Bitcoin. It went also up to the same degree. Now let's zoom out a little bit and let's have a look at the Bitcoin price in US dollars over the very long term. Now what we have over here are simply two random curved lines. Those are not logarithmic regressions. Those are simply just fitted curves. And they tend to connect the bottoms in the Bitcoin price very, very nicely, right? This chart starts in 2021, but they also connect the tops pretty nicely. The top in 2011, the top in 2013, the top in 2017, and the two tops in 2021. And where are we currently with that? The current top is at 118,000 roughly. A chance for a 17% gain for a potential risk of more than 60%. Now, there is a real chance of an altcoin rally right now. It might be that the upside potential for Bitcoin is somewhat limited, but we're already seeing the start of some of those OG coins, of those boomer coins to rally. And when we take that metric again, right, the Bitcoin price relative to the Nasdaq 100, and we look at this historically, then we saw at the beginning of 2021 how the relative valuation of Bitcoin hit its old high. Now, Bitcoin did not necessarily top from that point onwards, right? Bitcoin still went up by 50%. But something very significant happened over here in January of 2021. It appears as if the air was getting thin for Bitcoin, right? We had been over here. Again, the upside potential wasn't that large anymore relative to the potential downside because Bitcoin was high relative to the Nasdaq 100 and because so many people got aware of crypto again and wanted to get a piece of the pie. Most new retail investors bought the altcoins. They didn't buy Bitcoin. Bitcoin has already rallied. Now the question is, what's the next Bitcoin? And this is also what explains those YouTube numbers. The altcoin videos, the meme coin videos currently perform very, very well. This video is likely not going to perform well unless you, of course, like this and share this with your friends in case you get some value out of this. But let me show you the real value here. What happened actually in January of 2021? This here happened. The others' dominance rallied. It went up by almost 200% in the span of 5 months. The others' dominance is a metric of how important are all the altcoins that are not in the top 10. So it looks at the market cap of the altcoins that are not in the top 10, puts this in relation to all of the rest. And it's basically a measure for altcoin season, right? It's a measure of whether or not people are taking their profits from Bitcoin and are moving this now over to the altcoins. This is what happened in January of 2021 when Bitcoin was close to its all-time high relative to the Nasdaq. And when historically the upside potential really wasn't there anymore, when there was way more downside than upside. That's when people rotated into the alts. And who knows, maybe we see something similar again, right? This is the others' dominance. Let's look at where we are currently. This white squiggly chart is simply just an overlay of what happened in the past. And it seems like we are just starting with that altcoin rally. I'm not saying that this has to happen. I'm simply saying this is a potential way how things could play out again. I am saying that Bitcoin is probably not going to 2, 3, 4, 5x from here in the next few months. I am saying that there is more potential in the altcoins. I believe if you're currently super heavily invested in Bitcoin and your net worth is relatively high relative to your income. So let's say you've got 5 to 10 years of net worth of your income. So say your income is 100K and your net worth is 500K. And you've got now half of your money in Bitcoin. You've got 2.5 BTC somewhere. Then in that scenario, I believe it does make sense to take some chips off the table, to sell at least half of the Bitcoin. And then the question is, what do you do with those proceeds? There's 2 potential ways to play this, right? If you believe that your income will continue to grow and you are okay with taking on more risk and you're still relatively young, then you could take those proceeds and put them into the altcoins. If you are more risk averse, then you can simply diversify with things that are not that highly correlated. Now, we started this video with the high correlation of tech stocks relative to Bitcoin. So probably does not make that much sense to buy just Nasdaq 100 ETFs. But I want to talk about the potential diversifiers later on in this video. Let's first talk about Bitcoin a bit more. Have a look at this. This is the realized HODL ratio. So this measures the trading of the short-term traders, the traders that move Bitcoin between 1 and 2 weeks of holding period versus the medium-term holders that hold Bitcoin for 1 to 2 years. So it's a measure of how active short-term speculation is relative to long-term speculation. And of course, if all the short-term traders are out of the market, this is when we want to buy, right? This is when YouTube channels get 0 views. Nobody was watching the crypto channels in Q3 of 2022. And now everybody is coming back again. And just have a look at how this correlates to the price movements, right? We can be more heated sometimes, and sometimes we might be selling too early in a rally. But the risk is, in case there's 0 diversification diversification whatsoever, and you've got a lot of money in Bitcoin relative to your income, the risk is that you take the next bear market. And bear markets in Bitcoin can be very brutal, right? Last time we've seen a correction of 76%. Maybe next time we will see a bit less, but even if it's 65 or 70%, it's still a lot. If you move from 500k net worth to only 150k, that's definitely very painful. There are other indicators that are somewhat yellowish, right? They're not yet super red, but the risk to reward isn't as great anymore, definitely compared to say 2 years ago. This is the value days destroyed metric. So this shows what are the whales of Bitcoin doing. The whales that normally do not move their Bitcoin whatsoever. When they sell, then potentially the air is getting thin. And again, this peaked in January of 2021. This is afterwards when the altcoin rally started. We have seen a similar peak already in the middle of March of this year, but we are rising again. Bitcoin is cheap when nobody talks about it, and it can be expensive when everybody talks about it. It doesn't mean that the momentum has to turn around, but it's definitely not a steal. Thus, having a relatively low portfolio allocation does make sense during times like this. Yes, we might be missing some upside, but nobody knows for sure where the price is going. It's all just a game of probabilities. And again, the best time to buy is when nobody is watching. The best time to buy is when even the long-term holders on average are in losses. And so the average cost basis is here. This is the realized price. Historically, it was very good to buy Bitcoin whenever the current price is below the realized price. So when the market in aggregate was in losses. We've seen this after the minor collapse in 2018. We've seen this during the COVID crash, and we've seen this during the final capitulation of FTX and Celsius, etc. when Bitcoin was at around 17, 18k. Now that average cost basis is at 37k. It is okay to have exposure to Bitcoin, even at prices like this, but it is not okay to get completely wrecked in case things turn around. And so here's the market value to realized value z-score. So this looks at how much is the market currently in profit relative to Bitcoin's volatility. We are not at hyper elevated levels, but we are definitely rising. And we have seen turnarounds like this again, right? So in the past, the Bitcoin price topped and we didn't hit another peak in the market value to realized value z-score. We simply just went down. And again, this depression here was a 76% depression. The price went down massively. It's all about making smart moves, right? It's trying to be hyper allocated when nobody is watching, to have maybe 30-40% of your net worth in Bitcoin when we are below the realized price. When we are above, it doesn't make sense to have that much allocation. Then maybe just 20 or 10% of allocation is more than sufficient. Because again, it seems like in the last 7 years, Bitcoin did not outperform technology stocks by that much. All of that risk over the last 7 years for an aggregate outperformance of only 50%. So when we are hyper cheap in the market, it makes sense to have a lot of allocation. When we are not hyper cheap, when we are neutral or potentially slightly heated, it might make sense to have way less. Now, overall, the market is still expanding. So don't understand me wrong. There is money flowing into crypto, and money flowing into crypto means, of course, that crypto prices tend to elevate on average. And again, last time when we had been at a similar level to the prior peak relative to the Nasdaq, Bitcoin still outperformed technology stocks by more than 50%. And we currently still see most days positive Bitcoin ETF inflows. So there's money still flowing from traditional finance from Wall Street through the ETF into Bitcoin. And we also see how the stablecoin market cap continues to rise very quickly recently even. And the stablecoin market cap going up simply means that people move their fiat currency to a stablecoin issuer, maybe through a centralized exchange, right? When you send your fiat to Binance, Binance then sends this over to Tether, then Tether prints the tokens, then we see this here in this chart. And it's nice that this chart has so little volatility. It's very useful because of that, because you can very clearly see if we're currently expanding or rather contracting. This here over here was the Terra Luna collapse. And during that shrinkage of the market, we also saw FTX imploding. Since October of last year, we are expanding and we're even accelerating in that expansion. And so that would support the thesis that we're going to see a continued altcoin rally, so that the other's dominance is rising further. And maybe we see another 100% outperformance of the alts relative to Bitcoin. Maybe it will stop after 60%. I don't know. I'm simply just presenting data here and making comparisons. Overall, we are not yet in euphoria greed mode, right? There is not that much net unrealized profit and loss in Bitcoin. Whenever we went close to the red area, right, when a lot of people had net unrealized profit, that's definitely when you want to get out. But again, if we just draw the parallel to the second peak in November of 2021, where subsequently the price went down by 70%, we are at very similar levels now. Now, there's no need to sell Bitcoin now if you only have a net worth of, say, 3 months of your income, right? Say your income monthly is 5K and you've got 15K net worth and maybe half of that money is in Bitcoin. So be it, no problem. Even if that drops 50%, you can simply just save up. You can use your current income to buy the bottom, right? That's no problem. You can balance out. Your hedge is basically your income. You don't need to hedge with other asset classes. Your hedge is your regular cash flow. But if your regular cash flow isn't large enough anymore relative to your wealth, and if you would save heavily during a depression and you would deploy that saved money into the bottom, and that wouldn't really move the needle because you've already crashed down by 3-4 years of income due to the crash, then diversification becomes hyper important. And then the question is, what should we diversify into? Of course, partially tech stocks might still make some sense. Yes, there is some long-term correlation, but short-term you can still play those kinds of wicks. So let's say Bitcoin suddenly rallies 20-30% on a single day and the tech stocks did nothing, then it might make sense to simply just sell some of the Bitcoin and buy tech stocks, right? The correlation is only strong on the longer time frame. It's not necessarily strong on the day-to-day. But if you don't want to play those kind of games, or if you don't want to be too active in trading, or if you've got tax implications by buying and selling that often, then of course diversification into something that is not correlated for the medium term is more important. And surprise, surprise, one of the best diversifiers that is pretty liquid, that still beats monetary expansion to a degree, is gold. So this is the correlation over time of gold versus Bitcoin. This is a 365-day correlation coefficient. And that is very, very close to 0. So there's no real connection between the two. Bitcoin can rally, gold can do nothing. Gold can rally, Bitcoin can do nothing. The two variables don't move in tandem with one another, but they both protect against monetary expansion to a degree. Of course, the expected return for a gold investment is not the same as for a Bitcoin investment, but that is okay, right? Because once you are at a net worth that is worth protecting, then it's fine not to have the maximum return. It's more important not to crash down by 60-70%. The higher the net worth, the more important I believe it is to also preserve, to not just maximize on returns, but to also preserve. And in my opinion, it is a good time to buy gold. This is gold relative to the Nasdaq 100. It is historically pretty low. Yes, we have seen lower prices at the beginning of 2022 and of 2021, relatively speaking, but still we are pretty low. And the potential upside is maybe 40%, maybe even 80%. The downside isn't too bad, 10%. But again, we simply just want to ride those waves, right? We're not buying gold in order to double our money tomorrow. It's simply just to protect ourselves. Here's another interesting chart, right? This is the CBBI, to be seen at cbbi.info, and it's an aggregate indicator of various indicators I like quite a bit. Again, the market value to realized value Z-score. We've also got the RODL ratio, the net unrealized profit and loss. Pi cycle top is also in there, quite interesting. And we just aggregate this all together. We aren't at super high maximum levels, but we are at very similar levels to last time where Bitcoin peaked, and again where we saw a subsequent bear market. It's simply important to not think about this deterministically, right? Nobody knows where the price is going. It's simply just to be aware of the risk. The market is expanding, money is flowing in, but there is a real risk as well. And so why be that heavily exposed to Bitcoin right now? Why take on all of that risk? If you still want to have the same kind of risk profile compared to just buying Bitcoin, then you can simply also do a mix, right? You can take some of the Bitcoin gains, so sell some of the Bitcoin exposure. If you now say 50% exposed to Bitcoin, you can take some of that, put this into silver, and put the other half, say, into the altcoins. The altcoins are inherently more risky than Bitcoin. Silver and gold is inherently less risky. So if you buy both, then you have pretty much the Bitcoin risk. And I believe risk adjusted, that's the better combination, right? To have both altcoins now and be hedged with silver. You've still got the upside, you can still trade actively, and the altcoins might double from here, but at the same time, in case it crashes, you've got half of the money that you sold to then deploy towards the crash. I know this video is not YouTube algorithm optimized. I do know that not a lot of people are going to watch this besides the very long-term hardcore subscribers. If you, for whatever reason, stumbled upon this video without even being subscribed, then feel free to do this, of course. But as said, this is not the typical video on this channel, right? I mainly now talk about the smaller altcoins because this is where most of the upside, I believe, currently is. A like, of course, as usual, would be appreciated as well. And if you want to know what kind of altcoins I buy and sell, if you want to know more about the strategy that I use in order to beat Bitcoin, then feel free to check out the premium membership. There is a video dedicated with all the benefits that's down below at thebitcointrader.com. Feel free to watch that video. It's roughly 7 minutes in length. And especially if your portfolio is not just a few $100, but it's in the tens of thousands, maybe hundreds of thousands of dollars, it might make sense to invest some money in education as well. It might make sense to also have a community to bounce ideas off with. Looking forward to seeing you in the next video or seeing you in premium. Cheers!